Welcome to Investing in Intelligence, where we talk about artificial intelligence companies, stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about JFrog. I want to remind you that the opinions expressed on this podcast are just that, opinions. They should not be taken as specific advice to invest in a particular way. Kai, you promised you'd be wearing your Tesla hoodie today, and I don't see that. Why didn't that happen?
I think it's in the wash. I'm grief stricken at the moment. I cannot find my Tesla hoodie. I need to cheer to Tesla right now. Tesla, look at that. I think it was like 17% in one day and 13% in another day. Unlike Intuitive Surgical, which we talked about previously, which is not a artificially intelligent, in my opinion, company. Tesla is. We've got multiple things going on with Tesla, and we'll get to JFrog in just a minute. But James, I want your take on Tesla over the last week. Tesla dropping down to almost a low for the year, and then what a rebound. What's your take on Tesla and robotics and AI and the self-driving software and everything? What's your take?
Well, they had a pretty impressive earnings call. So if you're a technologist or if you're a futurist, you're going to love to listen to their earnings call. He came out and once again pushed hard on the full self-driving, the robo-taxis. It's different hearing it on CNBC where you'll hear the commentators say, oh, Elon Musk wants to make everyone's car into a robo-taxi, and they make it sound ridiculous when you hear most commentators talk about it. But then when you hear Elon say it, he actually convinces you. He says, essentially, your car will be able to go out and work for you when you're not driving it. Most auto owners don't use their vehicle X percentage of the time. I think it was a large percentage, like 60, 70% of the time they're not using their vehicle. Even when you don't want it to be out driving other people around for pay, you can actually use the GPU in your car because they have more and more powerful GPUs. You can connect your GPU to like a global cloud and provide GPU inferencing to the world and receive pay for that. So essentially he's making it into something much more than a car company. And it's not just the Teslas and their GPU and their robo-taxi potential. It's also the humanoid robot that he said they're going to hopefully make for sale at the end of next year. Like I said, though, I didn't get a lot of promise out of the cheaper models thing. He didn't really say that they're going to come out with a Model 2. Is more of a, hey, we may bring prices down on models. It was vague, and an analyst tried to get him in a corner, and he really wouldn't say whether or not there's going to be a new model. So that was a little sketch.
So what I'm hearing you saying is basically either market sentiment or as a future investment, because on EPS and just the numbers were horrible. I mean, they sucked, but obviously there was some guidance there. And is the market sentiment right now worth the jump in Tesla? I mean, it was down to almost below 150 a share, and now we're almost to the 200 level. It's that psychological potential resistance area. Was it worth it? Is it worth the jump?
Yeah, I think we're at a point in the market where sentiment really depends on your specific stock. The market as a whole obviously can continue to bring your stock up or down, but we're at a point where when you see Tesla moving up like this, despite so many downgrades, you know things are a little bit more stock specific right now. And indeed, during earnings, things are going up or down based on whether or not your stock delivers the earnings that the street wants. So yeah, I do like Tesla. I liked it. So we first recorded this episode on Sunday, had some technical difficulties and couldn't publish it. But on Sunday, I said, yeah, it's a buy. I mean, I literally said that in the recording. And then the next day it shot up, I think 13, 14%. But today it's down a bit. It's pulling back 5% today so far. But
I'm trying to get you to tell the viewers too what changed your mind, because about a month or two ago, I remember you giving me the old schoolyard, making fun of me. Even the first episode when I had my Tesla sweatshirt on, after the episode, you attempted to make fun of my glorious wardrobe attire because you were not a I wouldn't say believer, but you were not an investor in Tesla at that time, and I was. But so what's changed?
that's a good question. Well, there are a few things. What changed for me is that I mean, this was actually a post on Twitter. I'll show it. I'll pull it up for our viewers. I'll put it in the video. But essentially, there's a guy from Investor Business Daily who said GM and Ford beating Tesla at their own game. And then I went and looked at the actual numbers, and Ford is currently losing $132,000 for every electric vehicle they make. Rivian is losing $43,000 for every electric vehicle they make. Tesla is actually making $16,000 for every electric vehicle they sell. So I wouldn't say, if I don't know what their own game is, but essentially Tesla is the only company in North America, maybe even in the world, that's making money off of EVs. Chinese companies might be subsidized by the Chinese government. So I just think that Wall Street has been a little too harsh on Tesla. It's still a young company, and it's a technologically dynamic company. So they are a disruptive tech company, not a car company, but Wall Street values it as a car company. And that's the first thing that Elon said in the call. It's like, hey, you can't value us as a car company. And I agree with him. He's right.
Well, I think that's an excellent take. One of the things, the ultimate goals I'd have, James, is to have Elon Musk on this podcast, and we'll just head out to the stratosphere, just like SpaceX.
Well, you have to say really nice things.
I think we should do that. I think
if you say lots of really nice things about him. So we just have to bow down and worship, and eventually he'll show up.
Now let's move on to JFrog in just a second. But so you drive a Tesla,
yeah?
So what's your take on the self-driving software? How is that working for you? Number one, and then number two. One of the reasons why, for the listener out there, I think Tesla is going to win the race. It's going to win the race to self-driving vehicles. I think Elon Musk is absolutely. He had something recently where he said, even if I was not the CEO of Tesla, Tesla will solve this problem. Yeah. But they're collecting a large amount of data in regards to AI and synthesizing all this data due to all the Teslas on the road. And so, what do you think of that self-driving software? What's your take on that?
Yeah, so first of all, the self-driving is good, especially on easier streets. So I personally, in all transparency, I don't have full self-driving. I have what's called autopilot, and I always have. For 4 years, I've had autopilot. Now, autopilot doesn't do well on city streets. You're not really supposed to use it on stop signs, stop lights. But the full self-driving, which I did use one time when I had my vehicle being repaired, I used a full self-driving. Man, it's crazy. You sit at a stoplight, and it knows when the light turns from red to green. It knows the stop signs. It's really, really impressive. It's just that last 1%. So it doesn't matter whether we're talking Waymo, Cruise, or Tesla full self-driving. There's still 1% of, maybe less than 1%, maybe like 0.1% of the time where it doesn't know what to do, and it's going to have a problem. And that 0.1% of the time can be a very dangerous time period. So look, I have no doubt. No one has any doubt. 10, 15 years from now, we're going to be doing a lot of self-driving. The question is, how does this shake out? There was a news story. So CNBC published a story. Tesla Autopilot linked to hundreds of collisions and has critical safety gap. This is from the NHTSA. So this is actually a new judgment that came out from a government study, and it looks bad, but I just feel like the regulators need to understand that Tesla is saving more lives than it's costing. So some people have had accidents and they immediately blame it on the Tesla after their accident. Maybe some of those accidents really were the fault of the Tesla, but autopilot and full self-driving are both still supposed to be used under close supervision. So you can't really blame the car if something happens. I just think that full autonomy is a ways off. Say it again?
We should do a whole episode on Tesla. I'm putting that in our queue. Let's do a whole episode on Tesla. But I would love to speak to that, and we'll talk about that at a different time as well. And as far as the self-driving software accidents, because I think time will tell. I mean, how many people drive drunk and kill people, or texting on their phone and kill people? So it's very interesting. This is what was in the news, and let's go to a company that most people may not know, which is JFrog. Can you tell a little bit, our viewers, what JFrog is, what it does as a company, and give us a little background on that?
Absolutely. And by the way, JFrog, I looked at their conference call on YouTube. It had 9 views. That's the least views I've ever seen on a conference call video on YouTube.
Unlike Tesla, I can wear a Tesla hoodie. I mean, looking at the JFrog logo and it's green, I don't think I would sport a JFrog. I don't know. Maybe they should get somebody on their branding. I'm sorry. I wasn't too impressed with that. I don't like green, at least the green they chose.
Well, just the frog in general. Like, what is the idea? I don't understand the concept behind the frog in general, but it's catchy. Anyways, so what they actually do is pretty
Not as
cool.
catchy as Tesla. And I will say JFrog, the stock ticker, is easier to remember. So perhaps there was some thought in that. So what does JFrog do? Tell our viewers what
Yeah.
JFrog does.
So they offer a software management platform. So the easiest way to sum it up is they help developers develop software. That simple. They help developers develop software. So software developers don't want to start from scratch, and JFrog offers the tools developers need to securely build, deploy, and update software. Now that's actually happening more and more with AI now. So developers are now developing AI-centric applications, and JFrog is helping them do that. So JFrog is especially providing security. They've got a plugin with Hugging Face. Hugging Face is the biggest open source model repository. So the biggest source for open source AI models, it's Hugging Face. And JFrog has a relationship with Hugging Face, and JFrog allows developers to ensure that the models they use from Hugging Face are secure, are clean, haven't been tampered with, are proven to work. So the integration of AI into existing software and new software is done a lot more safely and securely using JFrog. And
Okay.
so yeah, this is it, they've been doing well. So what I would say is they IPO'd in 2008. Sorry, they were founded in 2008 and they IPO'd in 2020. They've acquired 9 companies over the past years. And before we get to their financials, I'll just say, as far as keeping customers, they've got a gross retention of 97%. I think we said ServiceNow was 99% the other day. So JFrog is 97%, not quite ServiceNow level, but still great. They're keeping 97% of their subscribers, and their net dollar retention. So what is net dollar retention? That's how much revenue existing customers bring over a given period of time. So you want it to be 100% or higher. That shows you're keeping 100% of the money that you were making from your subscribers last year, this year. But theirs is 119%. So 119% means that extra 19% is upselling existing customers. So they're making more and more money from their existing customers. Net dollar retention, an important metric for SaaS companies, is 119%. So they're doing pretty well.
Yeah, so that great information for the viewer. So are you taking 3% of your portfolio and investing it in JFrog?
Yeah, so we on our site on investingintel.ai, you'll see that I think the position is around 4% or something like that. It's not our biggest position. This is a smaller company, so market cap I want to say around 4 billion for overall market cap, and their revenue is like, so they're expecting 90 to 99 million for the quarter they're about to report on, Q1 of 2024. So this is a smaller
Yeah.
cap company.
So in most technological revolutions, we see sort of three different things at play. You see sort of a boom, a bust, and really a build out, right? And so is JFrog part of the build out? Is it a bust? Is it part of this? And right now, my particular view is that we're in this boom that is artificial intelligence. Okay. We've seen this other times, and this boom of artificial intelligence, in my particular view of the market, is creating a bull market. We've seen this before with the automotive industry or the .com era, which it's brought about a particular bull market. And that's what I think we're in right now. But is it a bust, JFrog, or would you put it in the build out phase, or what's James doing?
Yeah, when we talk about a bust, we're asking, can they be disrupted by someone else? It looks to me like they don't actually have many competitors. So I was
Okay.
I was trying to figure out who their main competitors are. I don't see any publicly traded companies that do the same thing as them, and that's pretty awesome. So I actually don't see them getting wiped out right away. Now we've said before that we don't perfectly understand what JFrog does. DevSecOps, MLOps, there's all this fancy terminology, but financials seem to speak to they're doing well.
Yeah, I always have a fair amount of hesitancy in regards to investing in companies that I don't understand, either the financials or what they're selling or what they're doing. And I think that's part of the uncomfortability in regards to AI, because potentially, like it was in the .com era, I mean, a lot of people just don't understand it.
Yeah.
So let's say somebody is saying, hey, they've heard you or me on the podcast looking at earnings per share and PE. What does it say to you that their PE is 0?
Yeah, and that was actually tricky for me because for some reason on Robinhood and Yahoo Finance, it was showing a positive PE for every quarter. And then I went and I looked at Google, and on Google, it shows a negative PE ratio. So they're actually not a profitable company. I initially thought they were profitable, but they're actually not a profitable company, meaning their net income is negative. So after you subtract all their costs and everything, their net income is negative. Google shows a negative diluted EPS. Now, what I am happy to see is that their revenue has been growing along with their net income. So their net income over the last 4 quarters has gone from negative 21 million to negative 15 million to negative 13 million to negative 11 million. So we're getting closer to breaking even. And their revenue has gone
Well,
from 80 to 84 to 89 to 97 million over the last 4 quarters. So we're getting close to breaking even. And when it flips positive, I think that's a good moment to own it.
Well, and so one of the other things you can look at, and you can get on to, this is public information, but it was about $350 million in revenue for 2023, whereas the year before, I think it was $100 million more, and the same thing from 2022 to 2021. It's had drastically increased its amount of revenue. Also, when you look at the cash and liabilities, cash on hand, it is near a half a billion. The assets that JFrog has are near a billion, and its liability is half that. I mean, its liability is 500 million, so it has twice the number of asset to liability. And one of the other things that struck me, it has zero debt.
Yeah.
It has zero debt as a software company. And so, a software company may take a while, especially in this build out and boom phase of AI. And I see JFrog as a potentially a player here. It is part of my portfolio as well, even though it doesn't have a EPS or it's not a profitable software company yet. I think it will be, especially with the revenue growth. And so all it takes is all of a sudden for that switch to flip, and then you will see a large return on your investment. Anything else on JFrog, just in general? I hope that information helps a lot of our viewers. We agree on this company right now, but its earnings are not in the next couple of weeks, I believe. I think it's in May.
Yeah, I want to say earnings are May 9th. So originally I thought that earnings were this week, but these companies change their earnings date. Like within the month leading up to earnings, a lot of time they change their earnings date. So yeah, the last thing that I wanted to say on it is that something that we discussed previously is how to value these smaller companies, especially how to value companies that aren't profitable yet. And PE ratio is not the best metric to use for them. Actually, it's not even really possible to use PE ratio for them. We also know price to book isn't a good thing because they don't have a lot of assets. So price to sales is really what you want to use. Price to sales is the same thing as price to revenue most of the time because usually sales is the same as revenue. So in this particular case, their price to sales ratio is 12, which is about the same as SoundHound. SoundHound is a small cap stock that has been sold down pretty bad. It was up around 8, 9, sold down to around 4 right now. So SoundHound's valuation has been cut in half after it pulled back. JFrog has been kind of steady around price to sales of 12. Another company that, just to compare price to sales, another small cap company is NanoX. We talked about NanoX recently. It's an imaging company, I believe also out of Israel. So JFrog isn't out of Israel, but their board is pretty much all Israeli. They're founded technically in California. But yeah, so the NanoX price to sales ratio is 51. Compared to NVIDIA, I think their price to sales is around 35, 38. Compared to Micron, price to sales around 9. So I feel like actually price to sales, I feel like JFrog is actually valued more or less appropriately. And that's probably the best metric that we can use.
Yeah, as an investor, it may be worth. I mean, like we talked about the narrative in regards to the build out and how JFrog may fit into this whole AI theme here. We may watch if it has continued revenue growth or all of a sudden becomes profitable. I think that's a really good sign in regards to the AI industry, that it's actual real, that it's not a bubble potentially. So watching how all this plays out. What is your take? So switching up, we have a few things on the docket else that we want to talk about. Just in regards, you mentioned the market, and JFrog earnings not till May. JFrog is right at its 21-day and 51-day moving average as of Friday. Monday was an interesting day. We stayed above, or we're right at that 21-day and 50-day. So we're at a critical level of resistance here. How do you see the market playing out and JFrog playing out prior to earnings? And then what's your take currently on where we are?
Yeah, so I'm looking at a chart right now on TradingView of JFrog versus the NASDAQ. It looks like JFrog has outperformed the NASDAQ pretty consistently over time. JFrog up 103% over the past year or so. Let's see, this goes back to April of 2023. So JFrog up 103% over the past year, NASDAQ up about 33% over the past year. So a little more outperformance there versus the Nasdaq. But just looking at the market as a whole, I feel like we're still in sideways mode. I feel like with the 10-year so high and with so much fear for inflation, I feel like we're still kind of in sideways mode. So I feel like what I'm going to say something that I think most people wouldn't expect. I think the most important chart to look at for your stock, whatever your stock is, whatever you're interested in, I think the most important chart is going to be the 10-year. So
Wait, so the 10-year treasury yield. You're talking about 10-year treasury yield?
yeah, I'm talking about the 10-year treasury yield. I'm
Okay.
trying to pull it up on TradingView, but I can't really find it.
Yeah, so
So,
you're saying basically what I'm going to hear you say. I'm going to go ahead and predict what James is going to say is that as a 10-year treasury yield goes up, it's going to provide a headwind for the market, and that's what you think is going to be the tell-all for everything.
and I think that headwind becomes most significant above 5. So, especially once we get to 5.1, economists say it'll actually have a drag on the economy. So, indeed, that's the concern. Now, today we're up like a half a percent, or we're up 5 basis points today. We were up a little bit more earlier in the day. But yeah, when I look at the chart, we essentially bottomed around 3.78 and now we're up to 4.669. So that has been a bit jarring for the stock market. And I feel like we're still kind of in adjustment for that. And obviously, everything that everyone says about inflation kind of ties into that and where we go from here. So I think that's the main headwind right now. The market doesn't like not knowing. The market wants to be sure about our trajectory, and right now there's enough negative sentiment to make people unsure about where we're going on inflation and on interest rates. So that's
Well, and we talked about previously just when there's one thing going on at one time, it's a little easier for the market to handle as opposed to multiple things in the news, geopolitical concerns, for example, going on at the same time. However, I do think we saw a bump, but I thought we saw a bump due to some pretty good earnings posted by Google as well as Microsoft. Meta, I actually thought it posted really good numbers. It just sort of dropped on market sentiment. I don't think the drop was entirely warranted on Meta. And right now, yesterday, for those out there, I disagree with James. I think the number one thing to watch in the market and charts is put the 21-day moving average, put a 6-month or 2-year chart on there, a daily chart, and watch the 21-day moving average is a really good one to watch. And just right now is an interesting. We dropped below that. We sliced right through the 50-day moving average like a knife. Okay. And I told you, and what I want to hear everyone here is James say one thing: Kai, you were right. What goes up must come down. And we did drop back to the 50-day moving average. However, I was wrong in that we sliced right through it. Currently, yesterday on the S&P 500 chart, you saw this sort of the candlestick was a up and down bar with almost a direct line. So it was the buyers and sellers didn't know what to do really yesterday. It was almost just a stalemate. And so today is a big day. I think this week is a large week. We have Starbucks. It's not an AI play, obviously, but a lot of big earnings today. We had McDonald's this morning. We've got Apple this week. Apple, I think, is a big one. But let me switch. I want to switch to the last thing that we wanted to talk about really quick in regards to just investing. We talked about JFrog today, but JFrog is one company. And so a lot of times you can make an investment that diversifies your investment. And one ETF you could do that in is DXYZ. So give us a little news on number one, what happened with DXYZ. And then the other thing about ETFs is that it takes a large amount of money to stratify that amount of money into particular stocks to provide adequate diversification. However, one of the ways we can just do that is purchase an ETF, which automatically diversifies you. And so what's your take on DXYZ, which is an ETF involved with multiple different AI companies, and what happened with that?
yeah. So DXYZ, we talked about it on a previous episode. So DXYZ, I just pulled up the chart here. You can see that it started out around $10. I'm seeing below $10, spiked all the way up to over $100. And it looks like our current price is pretty low here. It looks like our current price is around $17. Now, DXYZ holds OpenAI and SpaceX, other private companies that individual investors are really eager to get into. It was heralded as a way for people who cannot get status as an institutional investor or as an accredited investor to own these private companies. Because normally there's a $2 million or an annual salary of $300,000 benchmark that you have to meet to own these private companies. Well, DXYZ is a closed-end fund, so it holds a certain amount of the companies, and that amount doesn't really float. They hold a certain amount, and there's a net asset value, so technically it's worth a certain amount, and that value that it's worth doesn't really change. So what you're buying is a set value, but unfortunately the price of the ETF can go way up. That leads to a situation where it's trading way above NAV, it's trading way above net asset value. And apparently Fidelity and Robinhood didn't like this. Fidelity and Robinhood felt like their users were paying way more for an ETF than it was actually worth. The best comparison would be Bitcoin. So Bitcoin right now is at $60,300. So if all of a sudden you bought an ETF that valued Bitcoin at $100,000, you're paying like 40% too much for the Bitcoin technically. Well, with DXYZ, that was even more pronounced, and people were paying way too much, like 3 times, 4 times, 5 times too much, maybe even 90% too much at one point for these private company shares that DXYZ holds. So essentially, Fidelity and Robinhood delisted it. And I went to Robinhood all of a sudden and I found that I just couldn't buy any. It said you can sell, but you can't buy. And guess what? When you can sell, when everyone can sell, but they can't buy, there's only one direction it's going to go from that point. And I'm sure there are some people who have different trading platforms who still could buy, but this was targeted towards retail, and retail is on Robinhood. So when retail can't buy the ETF anymore, obviously that's kind of not accomplishing the mission of the ETF. So it's been down only since then. I went to Reddit and I saw one Reddit user had emailed Robinhood and asked, what's the deal here? Why can't we buy this? And Robinhood essentially responded and said, we have the right to list or delist whatever we want. So yeah, DXYZ has been nuked. Now there are other ways to own private companies, even if you're a smaller investor. There's an app called Titan, and Titan allows you to buy mutual funds. There is an ARK Venture Fund, which holds some OpenAI, SpaceX, and all these other things. But really, Hive is the best way. So if you want to own a private company, Hive is probably the best way. But once again, you're going to have larger amounts of capital, like probably in the many thousands, maybe 50,000, 100,000, before you can buy a little piece of these private companies. Yeah.
Well, I wanted to just sort of address that as something in the news. And real thing last week, looking at the charts today, we're still right up at that 21-day moving average. So everyone, it may be worth this is time to do your homework and watch some of the companies. Everything as a sector, I think, has been down today. So it's not particularly just the informational technology sector. James, yeah, been fun. Anything else that you'd want to talk about? Any last thoughts on JFrog as a company? Are we going to get some? Maybe, I will wear the Tesla once it gets out of the wash. I can find it again. I will wear my Tesla hoodie. But I'll look up the JFrog. I wonder if do they have any JFrog attire that they sell? James, the background on my Tesla hoodie is James. It's very cherished to me because James got me my Tesla attire. And so where did you get that when you bought that Tesla attire, if you don't mind me asking? And because maybe I'll go searching for some JFrog.
Yeah, Tesla is all about the culture. I mean, they have an entire store on their website where you can buy clothing. Obviously, JFrog doesn't have anything I doubt there's even a JFrog shirt. I'd be impressed if you could find one.
JFrog, if you're listening, I think you should come up with. I think an excellent move. It's like you should come up with attire to wear. And James, what I would like to do to reciprocate is if JFrog ever does have if it does have something like that, I'll look that up. I will send you one. So I'll wear my Tesla. You can wear your JFrog. I get a lot of comments on my
Yeah, they got to
Tesla
make it
hoodie.
about the
So
culture. Build a culture of fanboys for your company, and maybe that helps the stock. I mean, Tesla stock is like a meme stock almost. It's like a cultural icon, you know?
well, I mean, part of one of the things that investors should look at, okay, getting back to that on earnings calls and especially the CEO letters to the company, is culture and how much that CEO or the leadership of the company puts in regards to their business and in regards to the culture they're creating. And Elon is obviously trimming a lot of fat. And
10%,
I
10% headcount reduction, and a lot of executives have left. So some people are concerned because I've just seen so many top level people are leaving, like the head of powertrain. I mean, cars need a good powertrain, right? Well, the head of powertrain just left. So a lot of people, even the CIO or whoever it was, like the financial person on the call, at the end of the call, the financial person was like, well, that wraps up our call. You know, Elon, it's been really nice working with you for all these 16 years. I really enjoyed my time here. And Elon's like, yeah, it was good to have you. I honestly feel like Elon probably gave an ultimatum. He was probably like, hey, we're cutting 10% of entry level workers, and for you executives, you need to take a pay cut or leave. I mean, this is just my speculation. There's no fact base on this, but so many executives have left. I feel like he said something, or it might be the shares because he wants to change the shares so he owns more of the company. Something is going on at Tesla. Something is going on. Like there's something going on under the covers there.
price. So the viewers out there, price to sales, get slim. And the last thing I would say is that 21-day moving average. And when you're watching your charts, guys. So,
All right.
James, been fun. Great day. We'll see what the market does this week. And, I'll get you an Apple sticker.
Awesome. That'll work. Well, thanks for tuning in to our show. Please give us a like or comment. We'll be back in the next episode to cover another AI stock. You can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.